Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's hop into the chart. It's currently 6:45 p.m. Eastern time. The price of Bitcoin is about 104,875. And we're starting off here with the weekly chart. It's a little bit bearish. We're seeing high stochastics that could come down. We're far away from the 21-day moving average, which is currently at 94,382. Last week, we closed a red candle after having 7 successful green candles in a row, which is very rare. And so far, even though we have about 4 days before this candle closes, it's looking like a red candle as well. So it looks like we're going towards the downside. Take a look at the 3-day chart. This one closes in about a day and 2 hours. Last 3-day candle closed green, but the one before that was a gigantic red engulfing candle. That's bearish. And so far, this one is looking bearish as well. It could turn into a red engulfing candle as well. And we are also away from the 21-day moving average, which is at 96,837. Take a look at the 2-day chart. Stochastics are getting low, but we still could stay here for a while, rounding out. What's bullish here is that we are above the 21-day moving average, but we're getting red candles. This one also closes in about a day. Now on the daily chart, the stochastics are low, but if we zoom into the stochastics, they look like they want to roll over again. It looks pretty similar to this, how we were on the way up and then we rolled over. So this kind of looks like it's going to roll over. That's bearish to me. And also, we have not been able to get above the 21-day moving average. 1, 2, 3, 4, 5, 6 candles in a row that have closed below the 21-day moving average. This one closes today in about an hour and 15 minutes, and it's also looking red. So if I put on the patterns here, I have this currently in a bear flag that would drop us down pretty much to the 50-day moving average, which is currently at 99,863. So with this stochastic rolling over, it kind of looks like this might play out because we have not been able to go above the 21-day moving average. So this is looking bearish to me at the moment. The only thing that's bullish right now is that the golden cross has happened. The 50-day moving average is above the 200-day moving average. And if we zoom in, we are starting to see that the 80-day and the 100-day moving average are trying to catch up to the 200-day moving average, and hopefully they'll cross eventually. But I feel like we're going to continue going here sideways, either until this 50-day moving average catches up to price, or we're going to fall down with this bear flag. There's also potential head and shoulder here, and currently the right shoulder is being made. And if this plays out, we're probably going to go down to the 200-day moving average, which is at 95,000. Hopefully that does not happen. We take a look at the 22-hour chart. Stochastics were on the way up, but now they're starting to roll over a little bit, and we are below the 21-day moving average as well. This one looks to come down to the 80-day moving average, which is at 102,590. The 8-hour chart, stochastics are high. They're starting to come down. We're below the 21-day moving average. This is not looking good. We take a look at the 4-hour chart. The 4-hour chart is the only thing that has been holding us up. We have a whole army here with the 200-day moving average that's not letting these candles pass through. If we fall below the 200-day moving average, I have to turn bearish. If you guys see on the other time frames, on the 3-hour, we lost the 21 and the 200-day moving average. On the 2-hour as well, and also on the 1-hour, we have not been able to maintain ourselves above the 21 or the 200-day moving average. So this is bearish. Now on the 4-hour, I do have this in a falling wedge, and it has been tracing it pretty good here. And if we do break out, this will take us to about 114,000, which would be the all-time high if we do that. Right now, I'm seeing Bitcoin going sideways anywhere from 103,000 to 110,000. Even if we get back up to 110, I wouldn't feel super bullish unless we actually break out and do reach this full measured move of 114, because we could get to 110 and then fall back down from there. Also on the weekly, I've been telling you guys that we do have some bearish divergence. If you see from here to here, this is sliding up, and then from here to here is kind of flat to going down. That's bearish, and that could definitely bring us down. So guys, unless we could get above the 21-day moving average and the 200-day moving average on the hour and fully commit to that and stay above that strongly, right now I just see more sideways action. We have to stay above this 4-hour 200-day moving average. If not, this opens up the gates for 100k, 98k, 97k, 90k, even below. All right guys, that's the breakdown. If this gave you clarity, already a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.